Welcome, and thank you for tuning in. You're listening to the Beyond 50 radio program. I'm Daniel Davis. On the program today, we're going to be joined with the former president of the Dallas Federal Reserve. We're going to be learning about the toxic culture within the Federal Reserve that perpetuates broken policies and presents ideas for how to fix it before another financial crisis strikes. What's more, the election of another Washington insider like Hillary Clinton would have resulted in 4 more years of the same broken policy if the election had opened up the door for Trump to not only expose the current weaknesses of the Federal Reserve, but to make reform a reality, a possibility that didn't previously exist. Drawing upon our guest's first-hand experiences at the Federal Reserve, her book illuminates how the Federal Reserve abdicated its responsibility to the American people both before and after the financial crisis, and how nobody within the Federal Reserve seems to have learned or changed from the experience. Her book is Fed Up. It's an insider's take on why the Federal Reserve is bad for America. I'd like to welcome to the Beyond 50 radio program today our guest, Danielle DiMartino Booth. Danielle, thank you for joining us here on the program today.
Daniel, it's great to be with you. You've got one of these names I simply can't forget.
Yeah, I think I have the same thing that happens to me, especially in the Hispanic community. That's what they call me, is Danielle.
Yeah, I love it.
Now, first of all, let's talk about what your role was with the Federal Reserve and your experience so our listeners get an idea of what's going on here.
Well, so my role was very unique at the Federal Reserve. Richard Fisher, who was the president of the Dallas Fed while I was there, he and I both had our MBAs in finance, and we both started on Wall Street. So, if you will, the prism through which we saw the world was a little different than that of an academic econometrician-trained PhD. So he brought me in and established his own markets desk, so to speak. The New York Fed has a markets desk of its own, and the job of the New York Fed markets desk is to disseminate market intelligence among the 12 district banks. So, but Mr. Fisher saw fit to have his own internal markets desk so that he was sure that he had the most objective information possible before he went up to Washington, D.C. for the Federal Open Market Committees 8 times a year.
Now, let's talk about, for those who aren't really familiar with what the Federal Reserve does, give an explanation of what it is.
So, think of the dollar in your wallet, if you will. The Fed's main mandate is to make sure that the dollar in your wallet today buys the same thing tomorrow. And in 1977, the mandate was doubled to also include maximizing the number of people in the workforce. That's one of the things in my book I recommend we go back and undo, which would take an act of Congress. But again, it's minimizing inflation and maximizing employment. Those are the 2 main functions of the Federal Reserve. And of course, in the event that there is major instability in the markets, the stock market, the bond market, it is also their job to make sure that we don't cascade into some Great Depression type of situation. They call that the financial stability function.
Now, a lot of people are maybe familiar with the Federal Reserve and thinking about how it actually manipulates the economy, interest rates, things like that. What kind of clarity can we gain on why these people don't seem to be very effective when you consider that a lot of these are unelected academics with no real business experience, but yet they have a lot of influence on the American economy?
Well, they certainly do, but you spelled out for me, if you will, the reason that they're less effective than they could be. And it's certainly not that we don't need economists tracking the economy. That's their utility, if you will. But William McChesney Martin, the longest-serving Fed chairman, who was not a PhD in economics, once made the following observation, which I thought was very clever. He said, you want to have these people on tap because you need their knowledge and you need their insights, but you don't want to have them on top. Because, again, we're talking about unelected officials who really never had to satisfy a payroll or to be on the receiving end, for example, of something as disastrous and damaging as zero interest rates.
You know, I keep going back to the time that we faced the financial crisis back in 2008, and Benneke was this guy that was put on the cover of Time magazine as the man of the year, and I'm thinking, well, if he's the man of the year, then why did he kind of allow all this to happen in the first place? What are your thoughts on that?
It's interesting. People ask me all the time, why did you write Fed Up? And my stock answer is, because nobody else was going to do it. I had to write Fed Up, and because I felt like the average American needed to know the truth about everything that had gone on during the crisis, as opposed to what Ben Bernanke wrote, his own retrospective, which was cleverly titled The Courage to Act. And my rebuttal to that is I think the country and the economy would be much better off today and on stronger footing had Ben Bernanke had the courage to act a lot less, to do a lot less, and to be less intrusive into the inner workings of our capitalist economy. And I tried to emphasize as much as I can the capitalist part of it.
Yeah, because you take a look at all this, and it's funny because we've had experts on the program that said, they should have let these people fail. They should have just, because that's how the economy actually corrects itself, is by doing that very thing rather than trying to bandage up from the problem that they created in the first place. And so you kind of take a look and you wonder, so what is wrong with the current leadership that we have at the Federal Reserve?
Well, look, I think what's wrong, again, is, and I look at the world, my maiden name is DiMartino, and I look at the world as a place where if I'm going to cook sauce on Sunday evening and serve it to people, my family guests, then I sure as heck had better try it before I serve it to them. At the Federal Reserve, they don't actually have to eat their own cooking. They have the leadership has pensions and health care for life, and they are therefore assured that their retirements are secure. So they never have to make these difficult decisions that so many retirees have had to make when faced with zero interest rates. They're not running off to Las Vegas to put money into a junk bond fund. They're not forced into that very uncomfortable and compromising position of having to take on undue risks. Same situation with pension fund managers who have to take on undue risks on behalf of the people whose money they're safeguarding. And by the way, same situation with chief financial officers who have to maximize shareholder value, but they don't really know what the operating environment with a less intrusive Fed, where some of their weaker competitors did go naturally out of business, as you suggested. They don't know what that clean operating environment looks like, but they still have to maximize their shareholders' value, so they go out and borrow cheap in the capital markets and they buy back their shares. And one day we wake up a decade later and we've got the lowest productivity growth of all time. Well, let me tell you, these things are all related.
Now, Danielle, what caused you to decide to speak out about the Federal Reserve now?
Well, let's put it this way. I followed Richard Fisher, a non-bureaucrat, into the organization, and I didn't stop and wait for a moment. I followed him right back outside of the organization. It wasn't a place where I was necessarily welcome. It wasn't a place where my unconventional views were welcome, and I felt compelled to run out the door the minute he left after he retired as well. It was just a natural progression for me. But again, I feel like I was there at the right time. I witnessed the right things, and now I'm compelled and I'm able to share what I saw and what I experienced with the everyday working man and woman, because I made sure that I did one thing with this book, and that was to write it in plain English.
Now, I know that you believe that federal policy has helped to increase the welfare state. How has that occurred?
Well, if I'm Congress and I am faced in the years that follow the crisis with some tough decisions, you have to think that they're not quite as difficult if, as Jim Grant pointed out recently, and he made the cover of Time magazine when he did so, if the cost of the U.S. government to borrow 1.8%. It's a lot easier to take on difficult decisions when you can brag that on your watch the deficit is decreased. Well, of course the deficit is decreased. The cost to service the interest of the country has decreased, so that's just a mathematical truth. But in the background, the debt has continued to run up, as we have had the stealthiest, quietest expansion of the social safety net since FDR was in office. I'm sure you've seen the data about food stamps. I'm sure you've seen the data about people on the disability rolls. The fastest growing category of individuals receiving disability are those with quote-unquote back pain, which last I checked is impossible to diagnose. But there are many of these things that you can point to that suggest to you that politicians have not had to be disciplined in their approach to fiscal policy making because they've had a banker in their back pocket, called the Federal Reserve.
Now, we have heard from President-elect Donald Trump during his campaign about how he was going to audit the Federal Reserve, things like that, perhaps even rewrite federal policy. Tell us if that's actually going to happen, and what does it mean to do an audit on the Federal Reserve? What kind of an impact would something like that have?
Well, I think the aim here is the whole notion of an audit is that many politicians, and it's not just Ron Paul and then Rand Paul who followed him. You can turn on the news any day and see politicians from all across the country questioning the Federal Reserve and questioning how it makes decisions, and I find that to be a welcome change. But I would posit this much. You don't need to audit the Fed in the event that you can ensure by putting independent and objective leaders in among the leaders at the Fed. Instead, you wouldn't need to audit the Fed. But the reason there's this groundswell of criticism is that people feel that they've completely gone off the rails and that they're unaccountable for the decisions they've made on behalf of the entire country. And these decisions have had massive impacts, as I've described, with the retirees. I have 4 children aged 12 and under. It's very difficult to convey to them what the miracle of compound growth is because you can't march down to your local bank and take out a savings account or a CD or what have you and even exemplify the miracle of compound interest. When interest rates have been held this low for this long, you end up disincentivizing savings in and of itself.
So you can see how these low interest rates have had a big impact on people who are retired with pension funds and savings and et cetera.
Of course. And let's not forget the millennial generation. It was their parents, in large part, who took out cash-out refinancings, who took equity out of their homes. They took a lot of those proceeds and paid for their children to go to college. In large part, that was responsible for the huge run-up that we've seen in tuition inflation. And after the housing market blew up, which, by the way, was also a direct outgrowth of Fed policy, too low for too long, in the aftermath of that occurring, you have an entire generation of students who have no choice but to go out and take on student loans in order to finance their higher educations in the absence of the home equity lending that went away.
Now, do you think that Trump will be able to rework any Federal Reserve policy, or do you think that was just kind of one of them campaign thoughts that sounds good, but, well, as they say, you just can't clean out the swamp?
Look, this is not a figment of my imagination. It requires an act of Congress to reduce the Fed's mandate away from maximizing employment, to put that back into the hands of the private sector. In the case of emergency, put that in the hands of Congress, and then have them only have the objective of minimizing inflation. It takes an act of Congress, but he's got Congress right now. So do it. Redraw the lines of the Federal Reserve districts, and you would end up having a lot less in the way of bureaucracy because the country, the way it is today, is not that of what it was in 1913. I would say that there are 3 Federal Reserve districts that are in the Midwest that used to be economically powerful that are no longer. So absorb them into Chicago and create another one out west. Give these people permanent votes. Give all the district presidents permanent votes. Last I checked, California and Texas, where I live, the economic relevance to gross domestic product nationally does not fade away every 3 years. So therefore, they should have permanent votes and not rotate off of voting rotation on the Federal Open Market Committee every 3 years. And then Trump has the most important, single-handedly, he has the most important possibilities. He's got the greatest possibilities at his fingertips because we know that there are 2 open vacancies of the 7 on the Federal Reserve Board. We know that Daniel Tarullo's leaving in April. That makes 3. We know that Janet Yellen's term is up at the end of January of 2018. That makes 4. And we know that Vice Chairman Stanley Fischer's term is up in June of 2018. That means before the Senate goes off to campaign for the midterm elections, he can put at least 5 of the 7. He can install new blood, new thinking, new people. So the idea that Trump does not have an opportunity is absolutely ridiculous. It's right there on paper.
It certainly sounds like we're ripe for a big change. So what particular policies should be changed within the Federal Reserve?
Well, I think it's fair to say that the lowest hanging fruit is a recognition that we do have a banking system in this country and that the banking system has failed to provide its basic function in the face of zero interest rates. And in fact, banks have gone out and made some very unwise loans. Just look at the concentration of commercial real estate lending inside the banks. But let the banks go back to dealing in an environment where there's actually positivity in the yield curve, the difference between short and long rates. Make a commitment to never again return to the zero bound. And that's a great starting place. And then be much more disciplined in the way you approach monetary policy making going forward. There is something called a lag effect with monetary policy making, and that means that you have to sit back, be patient, and wait for the policies to work their way through the economy. I would argue that had policymakers been a little bit more cognizant of this idea of a lag, that they wouldn't have been so abrupt in launching the second and third and subsequent QE infinity rounds of quantitative easing and blowing up the balance sheet, which Fed staff research showed subsequent to had done a lot of nothing to ignite economic growth. Recognize the errors of monetary policy throughout this era of extraordinary intrusiveness and vow to never make those same mistakes again. There's a lot that can be done, Daniel.
You know, there's no doubt about it, too, and it's interesting how people who seem to have the strongest influence over the way our lives are guided, especially when it comes to the economy, as you were saying earlier in the program, have so indirect, what do I want to say here, experience with that. You know, they're not the everyday worker that's trying to get out there and earn a living and maybe save a little money for retirement, to buy the home, things like that. And you think, you know, these are the people who are trying to solve the problems with the same, thinking that created them in the first place. And I'm kind of wondering, you know, who do you think that President Donald Trump will tap to rework the federal policy?
Well, there are a lot of people on a short list. John Taylor happens to be one of them. He's of the famous Taylor rule, and I think the reason he's on the short list is that, again, there's this groundswell of desire for there to be more discipline in policymaking. The name Kevin Warsh has come up. He was one of your more independent people on the Federal Reserve in recent history. My former boss's name, Richard Fisher, has come up because, again, people are looking for what they know to be independent thinkers, people who speak with people in the business community, who are familiar with the effect that Fed policies had on businesses and on pensions in recent years. I would personally add that there are several pensions in this country that have managed to perform fairly well throughout this era of zero interest rates. I would tap into a lot of these disciplined pension fund managers and add them to it, as well as some of your strongest banking regulators as well. We never again want to return to a period in time where people inside the Federal Reserve who's supposed to be regulating the banking system can't even read a complicated balance sheet, which we know was the case in the years leading up to the financial crisis.
And yet, you know, here you see us moving potentially toward another financial collapse, as we've had people on the program that are talking about this, and it seems that as we get out of one, we're seeing encouraging growth in America, but yet, well, how do you expect this to actually be sustainable when, again, as I mentioned earlier, the same thinking that created the problem is coming up with the same solution to solve the problem? You just don't really see.
Well, you have to get rid of the thinking, right? This started in 1987 with Alan Greenspan putting a floor under the losses of investors. You have to have Federal Reserve officials and leaders who are willing to not allow the financial markets to bully them and strong-arm them into making policy that makes sure that investors are covered no matter what, and that Wall Street always wins at the expense of Main Street. You've got to have people with stronger spines who recognize that this one-trick pony is a broken pony, and again, that you won't go back there.
So now I'm kind of curious, as you decided to leave the Federal Reserve, should we just find a way maybe to get rid of it altogether, or is it a necessary evil, I suppose?
No, I don't even think it's an evil. I have tremendous respect for a lot of people inside the Fed who I got to know over the years, and the idea that we can end the Fed is fairly naive at best. We live in a globalized, interconnected financial system. We're a part of that system, and I think to suggest that we don't need to have a strong regulator and we don't need to have an institution that safeguards the value of the reserve currency, that of the U.S. dollar, that our foreign competitors will be chomping at the bit to step into the fray. So I worry about that. But again, one of the other things that I've suggested is that, consider that the height of the housing crisis when IndyMac was shutting down, for example. Well, the Office of the Comptroller of the Currency out on the West Coast was in the process of shutting down IndyMac, while the people at Janet Yellen's San Francisco Fed, she was running the San Francisco Fed at the time, they were trying to offer a line of credit. One of the other things that I have suggested needs to be done with Trump, and it has to be somebody like Trump who's not beholden to any of the lobbyists and the special interests who would prefer to keep this alphabet soup of banking regulators up and running. One of my arguments is that we need to consolidate and streamline the regulatory function such that the right hand never again does not know what the left hand is doing.
Now, how can people find out how to go about getting your book and, website, things like that?
Of course. Look, hop on to DiMartinoBooth.com. I publish every Wednesday a newsletter. I welcome you to subscribe. And go to Amazon, go to Barnes & Noble, and find Fed Up. Find Fed Up, read it, give it to your mother, give it to your daughter, father, sons. This book, as I said, it was written kind of in 3 stages, if you will. The book itself came flowing out of me, but then it had to be translated into layman's terms so that it could be accessible by everybody, and then in order to get past an army of lawyers, had to be documented to the teeth. Well, it's all of those things, but for people who have read the book, they have thanked me up, down, and all around because it's so accessible. It's so very readable. So I invite them to go out, get fed up, and read it. And then let me know.
And as you said, you invite them to get fed up.
Oh, yeah, get fed up.
I want to thank you so much for having the courage to get out there and share this with people to give them a better idea about what's going on and, get more involved instead of leaving it up to everybody else to, solve the problem, that sort of a thing. And for our listeners there, one more time, go ahead and give out that website again.
It's DiMartinoBooth.com, and you can follow me on Twitter at the same exact thing, at DiMartinoBooth. And I welcome your feedback. I welcome your readership with open arms, and it was my duty to share this. And Daniel, I'm grateful to you for helping me get the word out today.
Absolutely, Danielle. It's been a pleasure to have you here on the program today. Thanks for joining us.
Likewise, I appreciate it. Take care.
We want to thank you, the listeners out there, for joining us. You can also discover more. Visit us at Beyond50Radio.com. That is the number 50. Sign up for our weekly e-newsletter, and that way you stay up to date on what's going on in the world of Beyond 50 as well as upcoming programs. I'm Daniel Davis. Thank you for tuning in. This is the Beyond 50 Radio program, and remember, live your day past halfway.